statistical, mathematical fact
never has been down.
has broken every single record. There is no asset that has come close.
It's the only thing in the industry that was not touched, that was not hacked, and it never fails doing what it promised in 2009. It's never
What's
failed.
the best performing asset the world has ever seen? And you'll find out that it's Bitcoin.
Good afternoon, traders. Good afternoon, Bitcoiners. Well, it may not be afternoon for everyone. So good morning, good evening, good afternoon, wherever you find yourselves in the world today, wherever you find yourselves, welcome. Welcome, my traders. Welcome, my Bitcoiners. Welcome, my supporters. Welcome, my haters. Welcome, my followers. Welcome, my passers-by. All right. I have been trying to do these X spaces, these live X spaces, with some degree of regularity recently. And I have put together a variety over the past couple of weeks. And if you have not gotten an opportunity to at least hear a few of the topics we discussed during those prior live sessions, I really strongly encourage that you do. I mentioned in a post earlier that I do have my team working on slicing up the live sessions that we have here into more digestible, bite-sized, digestible segments that you can take in. These will ultimately be grouped by category or by topic. And I think that's going to be a cool thing as well. But I don't want you to wait for that. Our time is limited here with this incredibly rare asset we call Bitcoin. And so that might take a while to sort of get out there for you. So if you have some time, if you want to do some treadmill work or you got some things to do in the backyard or something like that, put some headphones on and click on one or two of the prior live sessions. Today, traders, I don't want to keep you, excuse me, I'm so sorry. I don't want to keep you too long, but I did want to touch upon this topic that got quite a bit of traction, quite a bit of attention. A specific post got some traction that I thought might serve us well to do somewhat of a deep dive in. And the post I'm referring to is why I don't trade Bitcoin. Now, the reason why I know this is always a popular topic whenever I make it clear that I am not interested in trading Bitcoin, I don't trade Bitcoin, and I encourage you not to trade Bitcoin. I know whenever I mention that, that is going to gain traction, that is going to have engagement, and that is going to spark a great deal of interest. And the reason for that is because I have people that have been following me on the various social media networks and in the live convention space and so forth and so on for decades, actually. Most individuals who are familiar with my background, my work, they understand and know that I have been a professional trader for the vast majority of my adult life. And I have actually done nothing else. I've only been a trader. I've only wanted to be a trader. I started in the professional trading arena from practically a kid, worked on Wall Street my whole professional career, left Wall Street to actually stay in the professional trading arena. And many people know me as being one of the most sought after speakers in the entire trading community. I continue to be brought in by organizations and exchanges all over the world annually to speak at their conventions, to speak at their annual events and things of that nature to address their market makers, their trading organizations, and so forth and so on. And so because my whole life has been based on trading, it strikes those individuals who are aware of that as being extraordinarily weird that Oliver doesn't want to trade something, because I had that reputation of basically trading anything that moves. And so I would tell people, if you don't want to be traded, you better stand very, very still. Because if it moves, I'll trade it. I'll do it. I will trade your mother-in-law for another mother-in-law and then another mother-in-law. If there were a market for mother-in-laws, I would trade them. I had that reputation, guys. And so I know that it strikes those who are familiar with that background as being very weird, very odd, very peculiar, because I don't want to trade Bitcoin and especially with the volatility that Bitcoin has, because historically I have always pounded the table on one thing, that diversification is and it is a substitute for talent. I've always promoted that. I've never believed in diversification, at least not diversification as it's generally understood by the public. I've never believed in diversification of items. I've only believed in diversification of time. And so time diversification is far different than diversification of specific items. I've also been a believer in diversification of price. And we're going to touch upon those concepts in just a moment, because they do tie into what I want to talk about today with you. Now, very quickly before I really get started, for those of you who are part of this live session for the very first time, I do want you to understand that I typically do not turn other people's mics on and have you speak. I'm very sorry. I found that it is far more productive for me to come on these live sessions with a predetermined topic I do a monologue on, and then you spit out your questions if you have anything that you want to ask or delve into, whether it be connected to my monologue or not. All topics are open. I am open. I can take the good along with the bad. I'm wide open. Okay. But I found that format is far more productive, and it also lends itself for me and my team being able to, at some subsequent point, go back to the recording and actually do some additional work with it for future forms of release and content. Okay. So what's the topic of our talk today? Very simple. Why you do not trade or sell the Mona Lisa. Each and every time I'm confronted with a comment or a person who is really preoccupied with selling Bitcoin in particular, or trading it, it becomes instant. I'm instantly made aware of the fact that this person has not quite arrived at the point of viewing and seeing and understanding the asset of Bitcoin. Bitcoin, to them, anyone who wants to trade Bitcoin or anyone who wants to sell Bitcoin, it's obvious that to them, Bitcoin is simply another one of the assets that have always been tradable. Bitcoin to them is nothing more than a different type of stock, a different type of options contract, a different type of futures contract, a different tradable item. It's something else to make it. To them, Bitcoin is a tool or an avenue to make something more important. And herein is the grand error. And it's at the crux of all of their desires to trade and sell Bitcoin. The assumption that there is something else better to sell Bitcoin for. So to them, Bitcoin is an inferior tool that you use as a stepping stone to get something more superior than Bitcoin. Because if they truly understood that there is nothing more superior than Bitcoin, then they would reverse their mindset that everything else becomes tradable as an inferior asset, as an inferior item to get more Bitcoin. If Bitcoin reigned supreme in their mind as the ultimate thing, then everything else would be bought and sold for Bitcoin. Everything else would be traded for Bitcoin. But the fact that they view Bitcoin as tradable and sellable communicates the fact that they think that the inferior item is Bitcoin and the superior item is US dollars. Or the superior item is a house. Or the superior item is a car, or a yacht, or a trip around the world, or maybe the avenue to the woman of their dreams. I have reached a point in my journey with Bitcoin that I can't imagine very much that I would sell Bitcoin for. And so there are two things that are embedded in the title of this talk: why you don't trade, that's one thing, and also why you don't sell. What I'd like to do right now is basically reiterate what I did explain in my post as to why trading Bitcoin is actually dumb and why it's a losing strategy over time. And so let's just touch upon those things. All right. And some of you might disagree with me. I believe if you sit here, those who disagree with this notion right now, I do believe that by the end of our talk, you might agree with me. And those of you who don't might be open to changing your minds a bit later. So why is trading Bitcoin a losing strategy? And first of all, this is what I'm about to explain to you comes from a professional trader for over 4 decades. So I am not a crypto bro. I am not an influencer. I have traded hundreds of millions of dollars an hour as a career. So I am telling you that trading this asset is statistically and mathematically stupid. And here's why. Number one, and these things might be worth writing down. Number one, write it down if you can. Bitcoin is an 80 vol asset. I'm going to repeat that 2 more times. Number one, the reason why trading Bitcoin is absolutely mathematically, statistically dumb is because Bitcoin is an 80 vol asset. And anyone that tells me that Bitcoin is no different from anything else, so all the rules apply to that apply to everything else applies to Bitcoin, they are ignorant. They do not understand that there are very few assets on planet Earth, very few things on planet Earth that are 80 vol assets. Now, what exactly does an 80 vol asset mean? Generally, it's not absolutely pure in this definition, but it's good enough. Generally, what an 80 vol asset means is that on its drawdowns, this is how I want you to understand what an 80 vol asset is. On Bitcoin's drawdowns from peak to bottom, its average bear drop, its average decline is around 80%. That's not the very, very defined definition of what an 80 vol asset is, but for our purposes, it's a perfect definition. I want you to understand that the average decline in Bitcoin historically has been 80% from high to low. Now, each of those bear market drops have historically become shallower and shallower and shallower. And so Bitcoin's initial drop was something like 95+%. And from there, each drop got shallower and shallower. The last drop that Bitcoin had from 20,000 to 3,200 back in 2018, that drop was something like an 82% drop. The recent bear market we went through in the year 2022, that was a 78% drop from high to low. And I would assume that as more and more adoption of this asset takes place, that those drops are going to become shallower and shallower. Guys, one of the biggest plays of my life, all right, one of the biggest plays of my life was Amazon. I carried, right, 18,000 traders with me into Amazon. When Amazon, this is Amazon was $7.50. That's pre-split prices. So post adjusting for price splits, let's call it $1 and change or something like that, right? So I bring 18,000 traders on with me. I pound the table on this. If you get tired of me talking about Bitcoin, you don't know me. I was pounding the table every moment of my life, every mic I was given the privilege of speaking into. I talked about Amazon, every stage that you invited me to, every conference that you invited me to, every event you paid me to attend. I spoke about Amazon. Amazon was what I did with Amazon what I'm doing with Bitcoin today. People used to ask me, Oliver, why is it that you're so obsessed with this one thing? It's only one thing. Can you talk about something else? And I would say, no, there is nothing else to focus on. This is the play of your lifetime. This is the future. But what about this stock? What about that stock? Forget about that stock. Forget about this stock. Amazon is the only thing you need to focus on. So back in 2002, 2003, that was me. Amazon was my Bitcoin of 2002 and 2003. And at that particular time, Amazon had fallen over 90%. It was like an 85% vol asset. Its volatility was extremely wild, just like some people would believe that Bitcoin's volatility is that way. But over the years, its drop got shallower and shallower and shallower and shallower. And this is the normal evolution of an asset that goes from virtually zero adoption to full adoption. But there's very few assets that are 80 vol assets at the same time. Bitcoin is one of the only true 80 vol assets, and 80 vol assets are amazing for accumulating. They are horrible for trading. They're almost impossible for trading. Traders get destroyed trading 80 vol assets, but those who see a future for the asset and use the 80 vol nature of the asset to accumulate, they win big if their hunch is correct. If the hunch about the future of that asset is correct, they use the 80 vol nature of the asset to accumulate. And so on those 80% on average declines, they're accumulating them for 3 to 4 cycles later. Now, what do I mean by 3 to 4 cycles later? In my space, a true plan to accumulate is to hold for 3 to 4 cycles. Now, cycles in the stock market are very different from cycles in Bitcoin. Bitcoin cycles are very, very precise. They're mathematical, and they are basically marked by Bitcoin's happening every 4 years. And so it's very easy to pan out 3 to 4 cycles in Bitcoin. It's 3 4-year periods to 4 4-year periods. All right. So 3 times 4 is 12 years or 16 years. So when you're accumulating in my industry, it is assumed that if you're playing a long-term play, it's assumed that you're doing it for 3 to 4 cycles. That would be for 12 to 16 year play. And an 80 vol asset is perfect for that form of accumulation. So what that would mean is that you're going to go through, the assumption is that you're going to live through 3 80% declines. You're going to use all 3 of them to get more. And that if you're interested in selling the item after 3 to 4 periods or cycles of accumulation, you can then flip it and go to periods and cycles of distributing it. So 3 cycles in, 3 cycles out, 3 cycles in, 3 cycles out. And this is an institutional long-term style approach to institutional accumulation and institutional distribution. All right. So item number 1, Bitcoin's an 80 vol asset. It's extraordinarily difficult to trade, but it's beautiful. That is one of the best qualities, the best characteristics to have if you just accumulate. So the 80 vol nature of Bitcoin is perfect for accumulation. It is horrible for trading. Here's another item. Item number 2, why trading is a losing proposition in Bitcoin. 80% of all Bitcoin's gains occur over 13 days per year. I'm going to repeat this. 80% of all of Bitcoin's gains. This is the best performing asset the world has ever known. It has the 1-year record for all assets. It has the 1-month record for all assets. It has the 1-quarter record for all assets. It has the 3-year record for all assets that have ever existed. It has the best performing 5-year record of all assets that have ever existed. It has the best 10-year record of all assets that have ever existed. Bitcoin has destroyed every single thing mankind has been measuring from a performance perspective. There is nothing close. Yet, all of those gains come in a very brief 13 scattered days a year. So if you were to take the entire history of Bitcoin's success, its upward movement, you would find that 13 days a year are responsible for the vast majority of Bitcoin's total lifetime gains. That is an extraordinarily small window. This asset trades not Monday through Friday, as most of you know. It trades it trades 24 hours a day, 7 days a week, 365 days a year. And out of those 365 days, only 13 are going to be the ones you really need to make sure that you are in every single one of them. Because if you miss one of them, you see, these 13 days make up for a lot of the other days that you are not positive. You are not, it is not performing well. If you miss one of these things, there is an exponential effect on your overall performance numbers. You can't miss a single day. You can't miss a quarter of one of these 13 days. You can't miss a half of one of these 13 days. You need to make sure that in order to get the full benefit of Bitcoin's potential, that not a single one of these days through an entire 4-year cycle is ever missed, ever. And that makes trading this asset virtually impossible. It is going to be impossible to time which one of the 13 days it is. It's going to be. There is no, we have not, as human beings, have not been given the power by providence to read the future. We have been given the ability to read probabilities, to assess odds. But that is an imperfect science. You are going to miss out as a trader on these 13 days. Maybe not all of them, but you'll miss out on most of them. And that will make you a loser. You are a loser. missing out on these days. So reason number one, Bitcoin is an 80 vol asset. 80 vol assets are virtually impossible to trade consistently well. They are great. 80 vol assets are amazing for accumulation. Item number two, 80% of all Bitcoin's gains occur in only over 13 days a year. Miss any one of them, and you're done. You're finished. All right. Third reason, item number three, Bitcoin is a true bearer asset, and most people sort of bypass this as if it's not all that important. And that, to me, leads me to believe that they don't understand the significance of what a bearer asset is. You see, because the world, the powers that be, the nation states, the governments throughout the world, over a period of decades, went through great lengths to remove all bearer assets away from human beings that they control, human beings that they rule over. A bearer asset gives the holder of the asset pure autonomy, pure self-sovereignty, pure freedom. And so, and also pure, in most cases, privacy. And so these bearer assets over time became a nemesis for governments and nation states that did not want their people to be self-sovereign, that did not want their people to have autonomy, that did not want their people to be actually and totally free. And so many excuses were made to remove bearer assets. One of the first offshore firms I formed was a company offshore that had bearer shares. And so this bearer share organization, it was my organization, literally the owner of the company would be he or she who bared the shares. So I could be sitting down at dinner with you holding the shares of my company. And if I literally put the shares in your hands, I am no longer the owner of that company. You're the owner of that company. Now, good luck finding the owner. Good luck taxing the owner with bearer share company. All right. So the point I'm trying to make is that governments and powers that be, they threw everything they threw every reason out there they possibly could to eventually convince everyone to give up their bearer assets. There used to be bearer bonds, there used to be bearer shares, there used to be companies that were based on bearer bonds and bearer shares. Gold used to be a bearer asset. And of course, they have given gold back as a bearer asset, but only after governments control the vast majority of the supply above ground. So they can let you have your little tiny piece of gold in your backyard or in a safe somewhere. They don't really care about it because gold has already been co-opted by governments. The majority of the above ground supply is in the control of a few. And so that's not important anymore, whether you bear or not. But Bitcoin being a bearer asset is very different. And so why does the nature of Bitcoin being a bearer asset make it almost impossible to trade it successfully? Because of the supply shocks that can be caused by the bearing of the asset. So the very fact that you and I can go into the spot market and pull supply away from that market and lock it away from every other human being on planet Earth really gives us the ability to dramatically affect the available supply of the asset. I can't affect the available supply of Apple shares. Apple's got nearly 16 billion shares outstanding, right? I can't ever impact the available supply of Bitcoin. Of Apple, I'm saying, but I can materially impact the available supply to the world of Bitcoin. All right. If I were to take my 6,000 Bitcoin off if I were to take 6,000 plus Bitcoin into cold storage, that 6,000 Bitcoin is a decent piece or a decent percentage or chunk of the network. And that affects the network's overall volatility. It affects the supply that's available to every other human being on Earth. And if enough of us do that, it can have a huge exponential impact on the price. And you just don't want to, as a trader, to have this blind spot where others can affect your risk profile just simply by removing the asset into their own hands. It makes for the asset being far more unpredictable, and any asset that is extremely unpredictable means that it's very difficult to wrap a risk profile around it. Now, I know a lot of amateur traders feel that that's not important, but professional traders don't trade something that they can't map out a risk profile for. And so it just makes it impossible for professional market play on a short-term basis. On a longer-term basis, all of these things are basically ironed out, if you will. I am talking about short-term trading within a cycle, trying to be in Bitcoin when the in is good, and trying to be short Bitcoin when the shorting is good. That's what I'm talking about. And the fact that it is a bearer asset makes that exceptionally difficult, on top of the fact that it's an 80 vol asset, on top of the fact that 80% of its gains occur over only 13 days a year. Now, here is one of the major reasons outside of what I just mentioned, one of the major reasons why, in my opinion, another one of these reasons why, in my opinion, trading Bitcoin is dumb. First of all right, Bitcoin's declines, which have averaged about 80%, are getting shallower and shallower. And so I believe that Bitcoin's next bear market will be potentially in the 60s. So we've done the 90s, we've done the 80s, we've just done the 70s. Okay. And I believe that the next is the 60s. So I think that every cycle, Bitcoin has the potential of losing a digit or going down a digit. It started off doing 95, 96, 97% decline, 80% decline. We just finished 70% decline, 70 plus percent. And I believe the next one's 60%, and the one after that is 50%. So if you think about short-term capital gains tax, let's assume that you did trade Bitcoin well. You got lucky this time. And Bitcoin has run up to the upside on you. And you take profits. You have actually, by taking profits in Bitcoin, you've already brought onto yourself a Bitcoin bear market. So let's say, for all practical purposes, when everything is said and done, 35% in taxes and fees and everything said and done, 35% taxes, government, state, whatever, 35% total in taxes. From the moment you take your profits, you have already experienced a 35% bear market. If Bitcoin starts to get to a place where it's only falling 60 in the 60 percentile, you're almost there. You're almost at the place by bringing a 35% bear market onto yourself instantly before the item gets down 35%, by the way. By bringing a 35% bear market onto yourself, you have actually brought it very close to when you're supposed to start accumulating, because what I teach my traders to do is an institutional style accumulation form. So we start accumulating aggressively in the bottom third of the 80 vol assets range. So we are always weekly DCAing even from the top all the way down, but we start to get aggressive in the bottom third. So what's the bottom third of an 80% drop? Do you understand? The bottom third of an 80% drop is just past 50%. So just past 50%, we would start picking up the size of our buy-ins. That you see, you always want to accumulate on the way down. You want to be heavier on the way down and lighter on the way up, right? So heavier on the way down will ensure that your average cost stays closer to wherever Bitcoin's price is. But when do you start being heavier? You start being heavier in the bottom third of an 80% drop. So that's around 55%, but we start a little bit sooner. So soon as Bitcoin crosses 52, 53%, boom, we start picking up the buys. So if we're buying every week, we double or triple the buys that we were doing before Bitcoin got down 50% or so. Now, if you've already brought onto yourself through taxes a 35% bear market, you're a stone throws away from starting to buy again. It's not even worth saving that 15%, and you're probably not going to get that right. All right. So from a tax perspective, it doesn't even really truly make sense. And it will make less and less sense as Bitcoin's drawdowns over time become more shallow and shallower. So taxes make it stupid to trade it. In addition to that, you've got transaction fees and slippage. So when you add taxes, transaction fees in and out, slippage, there's a lot of slippage in Bitcoin. All right. Wide spreads and a lot of slippage at times, especially in fast moving markets, which is predominantly when short-term oriented traders need to act. They need to act when those spreads are wide, when Bitcoin's moving quite aggressively and quite rapidly. You get the worst trends, you get the worst fills, the worst executions, the widest spreads, and your transaction fees are the highest. And so when you add all of that plus the 35% hit you're going to take from if you're profitable, it just from a mathematical standpoint, it just seems rather dumb. Last, but probably even more important than everything else I mentioned, I always get this where traders say, well, Oliver, why suffer? Why keep holding on to Bitcoin when I know that it's probably closer to the top? This is what they tell me. I know we're probably closer to the top. And I will give them that. It's not terribly difficult to determine if you are closer to the end of a bull run than it is the beginning. That's pretty easy. So if Bitcoin has 10x'd, all right, if it's 10x'd off the low, then you know that you are closer to the top than the beginning. It's not at the beginning for sure after a 10x. And the only thing you have to determine is, are you at the closer to the end or closer to the middle? Because if you believe that it can do another 10x, then you're probably closer to the middle. And if you believe that there's no way there's another 10x after this 10x, then you're closer to the end. It's just simple math. So it's not that very difficult to determine whether you're in the beginning, in the middle, or closer to the end. I give them that. But here's what else they say. Oliver, if I've been able to determine that I'm closer to the end than the middle or the beginning, why should I suffer? I should sell Bitcoin, wait for it to drop, and then go back into it after it's had its 60% decline, and I've got only on average 20% left. I can use that next period to ease in. And I'm like, Yeah, right. What do you think this is? Disney World? Dude, you're dreaming. It amazes me how delusional amateur traders are. They think that they're going to sell Bitcoin at the top, take the money, lock it away for 2 years, not do anything with it, and have every single penny available 2 years later, after 18 months later, 15 months later, or whenever it is. It's usually 15 to 18 months later, you start again. They're going to have all of that money ready, and they're going to pick the perfect time to get in again. What world do you live in? Can I just wake you up from your dream? Even if you got lucky enough to sell Bitcoin at the top, I bet my bottom dollar you don't have a single penny left when it's time to buy. That you would have done something with it, spent it, blew it, moved into something else and lost with it just because you got lucky with Bitcoin. You would have got into shit coins and lost it all, went into a few stocks and lost it all, bought something over here, celebrated with it over there. And by the time Bitcoin reaches that juicy accumulation zone once again, you don't have not even a small iota of the money that you took out of it. You are not that disciplined, sir. You are not that good, ma'am. I'm sorry. That's all delusional talk. And traders say it to me all the time. I'll sell the top and wait for the bottom. Yeah, right. Yeah, yeah. Sure you will. Sure you will. Sure you will. And then you woke up. This doesn't happen in real life. By holding on to Bitcoin, you will save yourself. Oh, I know it's not easy. It's going to take you a cycle or two to get used to it. I know that it can be emotionally difficult during the bear market. But once you get past one, it's no big deal. The bottom line is that you're likely to be saved by Bitcoin, saved from yourself, saved from doing something else stupid with the money. And it's funny how money works, is it not? The moment you have money available, you sell Bitcoin, you got these huge profits, life somehow just knows, doesn't it? Something comes up with a relative and you just can't not help. Somebody in your family gets sick. Your car breaks down and you need another one. It's funny how life can almost sniff out when money is available. Don't make it available. Keep it in Bitcoin, I say. Keep it safe. It's the safest vault human beings have ever had access to. But you've got to be able to stomach these 80% declines. And one of the ways is to understand, to eventually arrive at this understanding that the US dollar price really doesn't matter. It's the only thing that matters is my stack of Bitcoin rising? Bitcoin's US dollar price might be declining, but it's all about, is my stack rising? Do I have more Bitcoin this week than last week? Do I have more Bitcoin this month than last month? Do I have more satoshis this year than last year? That's the only thing that matters. The US dollar price is a temporary, fickle phenomena. The name of the game is get more. Get more. All right. So there's no guarantee that you'll have the money in 18 months. And there's almost a guarantee that you won't have the money in 18 months. There are far too many people who are depressed today that had thousands upon thousands of Bitcoin back in the early days, but are broke today. Some of your early adopters have virtually nothing today. Do you know why? Because it's psychologically hard to buy Bitcoin at 25,000 when you had it at 25 cents and you let it go at $25. It's psychologically hard to buy higher than you had it. Your ego is so hurt, it won't allow you to most of the time. How am I going to buy something at 25,000 that I had at 2,500 or $25? You'll simply wait. Maybe I'll buy it when it comes back to 2,500, but I'm not going to buy it at 25,000. No way. That's stupid. And then it becomes, I'm not going to buy it at 250,000. And I had it at 2,500. That's stupid. I'm not going to buy it at, now I'm really not going to buy it at 2.5 million. And I had it at 2,500. And there you go, missed the whole revolution. I've seen this happen my whole career. Traders that did not come in with me in Amazon, they would ask at $30, I remember the majority, $35. We got in, it was $7.50. $35. They're now coming off the sidelines. Man, God, you were right, Oliver. Do you think it's still a buy? I said, I told you, this is not something you sell. Not right now. So yes, this is nothing. 7 to 35. Yes, get in. No, I think I'm going to wait for it to pull back. It's probably got a 50 or 60% pullback. Amazon's volatile that way. And there they go. Could they had it or were aware about it at $7, couldn't bring themselves to pull the trigger at 30, 35. To this very day, they never played it. Only the ones who played it first. The other thing I want to mention to you is that something psychologically happens the moment you sell. Listen to me, Bitcoiners. Those of you who are thinking about selling at some point, I want you to understand that let's say that sell point comes in late 2025, early 2026. And you've got this huge, huge profit, probably the biggest of your life. Excuse me. If you sell, when you sell, because I know it's going to be when for some of you, you will never be the same. The sell does something to you psychologically. There becomes a disconnect between you and the asset the moment you sell. And from that point, you'll probably always be a seller. But you go into protective mode. So because you gained and then you sold and disconnected, you severed the umbilical cord, right? And you become disconnected with the asset. It left you with something. It left you with these gains, but you are no longer really with the asset. And so this will always make you second guess getting back in, because are you getting back in at the right time? Will you be ruining or giving back some of the gains that you got from the sell by getting in at the wrong time? It will make you a scared, nervous, new buyer for the rest of your life, for the rest of time. Selling a rare, multi-decade asset like Bitcoin, selling it to get back in changes you. There's a psychological shift, I'm telling you. And it will be forever difficult, even as you've reached, even if you got lucky and held on to your money and reached that 70, 80% drawdown, you probably still won't do it, because at that point, everyone's bashing on Bitcoin. Every news article, all the Peter Schiffs of the world are calling it zero again. It's hard. It's easier to buy if you've never gotten out. It's easier to restart that accumulation plan. It's easier to step up and double or triple the size now if you've never sold. And so that's another reason I believe that trading is dumb with Bitcoin, because it increases your uncertainty by the severing of something, that connection between you and the asset. The moment you sell, something changes. So holding on, in my opinion, saves you. It saves you from stupidity, because you don't have the money to be stupid with. It makes you more responsible. It fortifies you. It deepens your faith and your belief. It's life-changing in a way. It teaches you discipline and brings about a steadfastness. You feel rooted. A sense of superiority begins to develop when it comes to you standing up against resistance and negativity, that you are no longer a slave to price, that price does not move you. Price does not influence you. Price does not control you. Your principles control you. Your own internal belief system is your guiding light, not what the price says. You become more principled as an accumulator and as a holder. You become a more principled individual that will not let a moving price make you abandon your resolve. And that's very rare. Most people will sell their brother for a price. Most people aren't principled. But holding through a bear market and not letting price influence you, not letting it control you like a marionette puppet, right, does something magical. And you go through a bit of a change there psychologically. Guys, Bitcoin is the Mona Lisa. There's only one. And there is going to be a point in the future, in my belief, this is my 2 cents, but hear me out. I believe that Bitcoin will increasingly become something that people just don't sell. Now, I get a lot of flack when I say these things. I get a lot of resistance. Oh, no, Oliver, it's going to be always for sale. Yes, in a way, but way far away. So I've always had this saying that everything's for sale. But what does that mean? Like, yeah, it's for my rare Ferrari might be for sale, but that price you have to hit is going to be very, very, very high. So when I say that I believe we're going to move to a world where Bitcoin is not sold, I believe we're going to move to a world where the only time it's sold is a newsworthy event. Like, oh my God, someone transacted X number of value on the Bitcoin blockchain. I believe we're moving to that world where it becomes newsworthy. The same way when a major piece of art sells, it's written about in the art magazines and, a little tiny segment on the news. Oh, one of one of Monet's, paintings went yesterday for that, 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 that. I believe that that's how rare a transaction on the main chain will occur. We're talking about the scarcest asset on the planet, and soon to be, in my opinion, the most valuable asset on the planet. So when you combine the most valuable with the scarcest asset, who sells that? Who's going to sell the most valuable asset and the scarcest asset for what? For the 15th scarcest? For the 20th most valuable? What do you sell the most valuable asset for? And when you put those two together, it becomes even more stupid. Like, what do you sell the scarcest asset on earth that is also the most valuable asset on earth for? You don't, because guess what? You'll never get it back, ever. No one, the person you sold it to is not going to be stupid like you. Bitcoin becomes, outside of gold, let's put gold aside for the moment. Bitcoin becomes the most valuable asset on earth at $152,000 of Bitcoin. Do you know how close we are to 152? You think 25, 24, 26, you think that's far? That's not far. I believe we're there by 2025. So let's say I'm right. In the next few months, 2025 is a few months from now. I call that a few months from now. That's a year and a few months. A year and a few months from now, right? A year and a few months from now, it's possible that Bitcoin's the most valuable asset on planet Earth. In April 2024, that's a few months away, it becomes the scarcest asset on Earth. Do you understand this? The scarcest asset on Earth, it achieves that April. And 1 year later, it's likely to achieve the most valuable asset on Earth outside of gold. Let's put gold aside, because that price is 600,000. All right. That's the next cycle, maybe. I'm talking about what's going to be achieved this cycle, in my opinion, has good odds. I can't tell you what's going to happen. It's just, I believe there are decent odds for this happening. And so who sells the most valuable asset that is also the scarcest asset? And this is just not a supposition on my part. This is actually playing out in real time in front of our faces. Every single cycle, we go to a new high HODL rate, right? So what are we now? 70+% of all Bitcoin that exists today, 70+% hasn't moved in an entire year. That's never before been that high. Where was it last cycle? 60. Where was it last cycle? 40. 20. That's going up. How do you go from 20% haven't sold in a year to 40 to 60 to 70+%? We just had one of the longest bear markets in Bitcoin's history, and 70+% didn't care. 70% of the Bitcoin said, I don't care. 70% of the Bitcoin out there says, I'm not moving. 70% is I'm not getting rid of mine. I'm not selling to you. I'm staying right here in cold storage. I don't care what the US dollar says. I don't care how deep the bear market goes. I don't care what the FUD is in the New York Times or Fortune or Forbes. I don't care what the politicians are talking about with Bitcoin. I'm not moving. 70% said that the last year, 70+%. Where is it going to go next? 80%. Where is it going to go after that? 90%. And it is going to reach practically 100%. Hasn't moved in a year. 100% hasn't moved in 2 years. 100% hasn't moved in 4 years. And it's going to be a rare event when major chunks of Bitcoin move. Now, some of you are not happy by this picture that I paint because you're still stuck in this idea that Bitcoin needs to be buying hot dogs and hamburgers and Diet Cokes. That'll come and that'll still be with us. But that is not what the world needs right now. We do not need a money that allows us to buy more shit faster. That's not solving one of the biggest, most serious problems almost every human being on earth has. Rich or poor, high or low, white or black, fat or skinny. Doesn't matter where you are, there is one universal problem: financial slavery. We are forced to work for a money that we do not control. We are forced to work for a money that is in the hands of a few, where they can do anything with our money, but we can't do anything with our money. We are forced to work for a token that's been created out of thin air by someone else. And that token is made to be less, although we have to give more every year. We are forced to give more for the same token that keeps getting valued less and less every year. Last year, I had to work 8 hours for this many tokens. Now I have to work 10 hours for the same amount of tokens. Now I have to work 12 hours for the same amount of tokens. And I didn't even choose to work for this token. You told me I had to. That's the problem every person in the world has. We're forced to work for we're forced to work for master's token. And buying hot dogs and hamburgers at faster and faster speeds is not solving this issue. What's solving the issue is storing your time, your value, your wealth in something that is outside of man's control, that is the scarcest thing on the planet, that is quickly becoming the most valuable thing on the planet. That's where I want to be. I want to have a seat on that train. I want to have my life inside of that train. I want to have everything that I work for stored there. I want to have it stored in the best performing asset on the planet. I want to have it stored in the rarest asset on the planet. I want to have it stored in the most valuable asset on the planet. And I want to have it stored in something that no human being can touch or ruin or debase or inflate away or confiscate or steal. Every problem we've had is because we've had to trust human beings. We've had to trust banks. We've had to trust the brokers to do the right thing. We've had to trust everybody to do the right thing with our lives, to do the right thing with our work, to do the right thing with our money. We've had to trust people. And because of that trust, we keep getting violated. And for the first time, we don't have to trust anybody. For the first time, it's me and me only, with my wealth stored in something that no human being can bother. I don't have to trust anyone anymore. And so that's what's needed right now. And the medium of exchange part, in my opinion, will naturally morph itself into existence more and more. You can't have a medium of exchange that's solid until first almost everyone is holding it. You can't have a medium of exchange if 0.003% of the world have it. How can it be a medium of exchange? Not enough people hold it. So first, before a medium of exchange, is let's get it in the hands of almost everybody. Then naturally, the market becomes a real market. Everyone can participate, but you can't have a real market with a medium of exchange if less than 1% of human beings have it. So that's not the time to be focused on spending it and selling it. That's another thing. You don't sell an asset that is 0.003% of the world, that is going to 100% of the world. You don't sell at 0.003%. Literally only there's two zeros, only 0.003% of the entire world hold Bitcoin. That is not the time you sell. At 5%, that is not the time you sell. At 15%, that is not the time you sell. You don't sell an asset that is on a trajectory to last for thousands of years, but let's even say decades. You don't sell at 14. At 14 years old. Imagine people that thought that Apple was done in 1994. Are you kidding me? No, I'm sorry. Apple came into existence in 1976, something like that. But let's say it came into existence in 1980. 1994. Imagine thinking that Apple was a bubble in 1994. It's 14 years old. It was finished. Apple's finished in 1994. It's going to zero. It's going to zero. It's done. It can't possibly do anything more. It's had 14 years. It can't do it again. It can't do its last 14 years again. Imagine Microsoft at 14 years old. It's finished. It's done. It was impressive. Oh, yes. Yes, they took over the software business throughout the world, but 14 years old now, finished. There's nothing, they can't beat their last 14-year performance. It's over. It's going to trend towards zero now. It's freaking stupid. Dumb. The bond market has been going, the bond market just started going down after 350 years. Bond market is 350 years old. And it just started going down now. The equity market. What the US equity market, because that's the only really equity market that really counts. But I don't want to offend anybody with that. But I mean, that's the main one, right? What is that? 180 years? It's been going up for 180 years? Imagine thinking that was over at 14 years. Imagine thinking the bond market was over at 14 years. Hell, Apple is 49 years old. Microsoft is what? 45, 46 years old, give or take. They've been going up for practically the whole time. Amazon's 25 years old, 26, 20, something like that. Amazon's 24. They've been going up for decades, but Bitcoin's finished at 14. It's crazy. The logic or the lack thereof that I see is just mind-boggling to me. Anyway, guys, I don't really have the time to sort of touch on any more points, but there are a lot of them. But the last thing I do want to say, and I'll try to take a couple of your questions. Usually you guys don't ask a lot of questions, so I'll probably bore you to death. But guys, let me go over this one thing with you. One last thing that I want to cover, I think is important here. I want you to understand that Bitcoin is off 60 some odd percent. I haven't even checked the price recently. I don't look at the price as often as you guys might think, guys. But Bitcoin is roughly 65% off of its all-time high. And even at that lower price level, you know what I want you to keep in mind? That Bitcoin has already outpriced the vast majority of the world at 20, what is it? At 25.5. At $25,000 per coin, the vast majority of the world already can't ever have a single Bitcoin. I want you to think about how rare that is. Ever. I want you to also go to the next level with that thought. I want you to understand that Bitcoin is outpricing, has already outpriced not only the vast majority of human beings in the world, it's already outpriced the vast majority of single-digit millionaires in the world. That's right. Single-digit millionaires, most of them can't afford a full Bitcoin. And I've explained this to you before. And as an example, as a very quick example, I'll give you this. Someone is a single-digit millionaire because they have 2 apartment buildings in a city. I know a person like this. They have 2 apartment buildings, and they rent these apartment buildings out. You know, there's one that's like a 4-story one and another that's a 6-story one. And, you know, there's a variety of apartments, residential apartments in the buildings. And the person lives off of the rent. The rent has paid the mortgages down, and there's excess from that rental income that the person lives off of, and so forth and so on, right? This person's a millionaire, but they're a millionaire on paper. They're a millionaire because it's in those buildings. That person that's a millionaire, that's worth almost $6 million on paper, can't afford to buy a couple of Bitcoin today. They're living decently. Their wealth is there. And so there are thousands upon thousands upon thousands of millionaires like that, where they own a junkyard that's worth a few $1 million. And they own a car dealership. It's a Chevy Ford dealership, whatever. They do a decent living, but they don't have, like, you know, $200,000 hanging around to buy a few Bitcoin. It's already at its depressed price, pricing out people who on paper are millionaires that say, I don't think I can afford a whole coin. Imagine in 2025, if I'm right, it will start to outprice double-digit millionaires. And so this is going to continue, in my opinion, this movement of the majority of the world right now can't have one, can't afford one. Even if they wanted one, they can't. We're going to go to, in the next cycle, the majority of people can't have a half of one. The majority of people can't even have a half of one on planet Earth. The majority of people can't have a tenth of one. We're going there. And then it's going to go all the way to the majority of people can't even have a few million satoshis. That's Satoshi millionaires. All right. How much does a million satoshis cost now? What, $250 to be a Satoshi millionaire? I believe Satoshi millionaires are going to be a thing. You're a Satoshi millionaire? Are you kidding me? How early did you start? You were buying it when it could be bought, when they were giving it away. You were actually taking advantage of it when there were these things called exchanges that just had it for sale all the time. Really? Wow. What made you see that? How did you see that vision? I believe that's going to be a thing. You, in my opinion, you don't understand Bitcoin if you're itching to sell it. To me, you don't understand Bitcoin if right now you think it should be used to buy coffee. I'm not saying you can't. I support Bitcoin companies that a little coffee shop or something. I always keep a few satoshis in a hot wallet to support them. I do that. But that is not its important use case right now. And so I'll say again, you can't trade this successfully, in my opinion, so you shouldn't try. You can accumulate it successfully, and you should try. And if I were your advisor, and I'm not, I would try my best to convince you, let's do this for a few cycles. We've got the internet at 14 years old. A lot of people think the internet came into existence in the 1990s. The internet came into existence in the 1960s. And so imagine 14 years from the 1960s. We're catching the newest version of the internet 14 weeks into its pregnancy, into its embryonic state. It's a baby. And you don't sell babies, guys. You don't sell babies. You don't trade babies. All right. Who knows? Calvin says, who knows? Maybe in 25 to 50 years, people won't sell Bitcoin. Like I said, I believe that's the case. I believe that's the case. Nobody's selling Monets. Nobody's selling. I love Monets, guys. That's why I'm always mentioning Monet. I have a Monet. I love Monets. But nobody's selling them regularly. No one's selling regularly Picassos. No one's selling new prime Manhattan land. When's the last time you heard a piece of land, prime land being sold in Manhattan? That's very infrequently. They'll sell the apartments in a building, but the land, uh-uh. And so I say, let's wait for the buildings on top of Bitcoin that are being built, that are going to be built. Let's sell those back and forth. Let's wait for the condos that are going to be built in those buildings. And let's buy and sell those condos in the buildings that are built on top of the Bitcoin base layer. Don't sell the base layer. Sell the things that are going to be on top of it. All right. Sell the businesses that you build on top of Bitcoin. I'm an owner of Satoshi, the Satoshi app. That's built on top of Bitcoin. You don't think that's going to be for sale? Sell the things on top of Bitcoin. Don't sell Bitcoin. Sell the buildings on top of Manhattan. Don't sell Manhattan. Sell the condos in the buildings on top of Manhattan. Don't sell Manhattan. Bitcoin is Manhattan. Let's get it straight. All right. The young gentleman says, in 2 months, 19.5 BTC will have been mined. 19.5 million BTC, you mean, will have been mined. Less Satoshis, 1 million in the top 20 wallets. So the supply in reality is less than what the network states. Yes, that is one way to look at it. And even further, the BTC lost. So what the young gentleman is mentioning here is that Bitcoin is scarcer than 21 million. If you look at it in terms of what potentially can move or be sold. But so there's 2 ways to view this. There's always 21 million. So whether someone lost their keys or not, that doesn't remove the Bitcoin from the Bitcoin network. So if you look at it from the eyes of the network doesn't know or care about who holds the keys. It holds the Bitcoin. So the Bitcoin is always in existence. In a sense, it's never lost. It's lost to the person who had the key, but it's not lost to the Bitcoin network. So you can't ever deplete the overall supply of Bitcoin. You can never destroy it. It is indestructible. It is infinitely indivisible, but it's indestructible. You can't make a single Toshi disappear. You can't rip it up. You can't dissolve it. And you can't go the other way either. You can't inflate it. You can't make one more than another. So Bitcoin is with us forever. 21 million will last forever. It's actually a tiny bit less than 21 million. We always round to 21 million. But the actual number comes a little short of 21 million. It's a little small incidental detail there. All right. So in that way, nothing's ever lost. But looked at from the other way, what potentially can be sold? Well, Satoshi's 1 million Bitcoin will never be sold. Okay. So that's gone. Not available to any other human being ever. Then the number has actually moved from an estimate of 4 million coins lost to 6 million coins lost. 6 million, not 4, 6. So if you take 6 million lost plus Satoshis, that's 7 million gone out of the hands of human beings. Basically, you're now down to 14 million Bitcoin that will ever be available. But then there are two other things I want you to consider. Now listen carefully to this. This is something that perhaps maybe one day we'll do a more of a deep dive on. But I can't remember what the percentage is, but understand that every single year more Bitcoin is lost. This will not change for a while. I think it will change in the distant future, but for a while it won't change. People are going to lose their keys. It's just people haven't stopped losing their car keys, their house keys, right? People are going to lose the keys. So a percentage of Bitcoin will disappear in this respect, or be removed from circulation in this respect permanently by just lost keys. That won't stop for a while. All right. Here is something that a lot of people don't think. Bitcoin dust. I'm going to repeat the term, Bitcoin dust. So there is a level of Bitcoin that is so small that it just gets lost forever. That's called Bitcoin dust. Like gold dust, Bitcoin dust. So let me give you an example of what Bitcoin dust is. Let's say the transaction fee, the cost of moving Bitcoin, the lowest cost to move Bitcoin is going to cost you, I don't know, 50 cents. But you have 15 cents. So you've got 15 cents worth of Satoshis in a wallet, but it's going to cost you 50 cents to move it or spend it. I'm giving you an example. This is not really what it is, but I'm just giving you an example of what dust is. Or 20 cents. I've got 25 cents in a wallet, 25 cents, but it's going to cost me 50 cents. That's the lowest price I can transact on the base chain right now, 50 cents. So you keep it there, right? And if the fee doesn't ever drop below 50 cents, it's gone forever. Everything below 50 cents is gone forever. Fees are going to trend higher. on the base layer. And so as fees trend higher, dust grows. Dust is the little particles of Bitcoin, the satoshis at the level that is so low in value that it's lower than the cost to spend it. And this is why UTXO, which stands for unspent unspent transaction output, your UTXO management is so very important, because if you mess this up, you could actually create dust that you didn't need to create. And you're chipping away at your wealth. These are some of the things that I cover and we go over in detail in my Bitcoin group. The goal is to become sophisticated Bitcoiners that know these things. And so when someone tells me it's impossible for Bitcoin to become scarcer, I've gotten this on my post from people that don't really understand Bitcoin at this level, that there's a dust effect that is making Bitcoin scarcer by the second. Just in the time that it took me to explain this, Bitcoin got scarcer through this dust effect. So look that up, do a little digging, research that so that you understand what dust is and what UTXO management is. All right. Most people don't have to do this, but the ones who really want to get serious about this thing should start to delve into things like that. All right. Nice comment, the young gentleman. Larry, hey, Oliver. I know we don't feel like selling our Bitcoin, but how do we take advantage of our asset to improve our lifestyle? Like, for example, borrowing against Bitcoin in future. How do you look at that? I believe that that's actually a better choice, but I believe that borrowing against your Bitcoin responsibly is better. And I have specific models that I share with my Bitcoiners that on how to do that intelligently. Because Bitcoin is an 80 vol asset, you do not want to borrow against more than 20%. So think about it, 80% vol, 20% you have to use as collateral against a loan. But with that, make sure that you're not stopping your accumulation process. So I would encourage something more like 10%, but the max would be 20%. So the way you should look at this, if you're thinking about borrowing against your Bitcoin, is that you don't have your full stack to use to borrow. You only have 20% of whatever you have now as collateral. So if you want to borrow to buy a home, is 20% of what you have now enough to serve as collateral? All right. And that's how you should think about it. Now, you can't stop accumulating, because Bitcoin could have one of these crazy down moves where you can still get eliminated or liquidated on an 80% drawdown. It's not going to happen overnight. You'll have time to prepare for it. But this is why even kind of borrowing against 20% in an 80 vol asset can be a little sticky. Keeping it to 10 to 15% is a lot safer. All right. So borrow against it. But let me just say this as well. When I talk to you through this metaphor, Manhattan land, Manhattan real estate, Manhattan land, and on top of the land was built a building and stores and malls and movie theaters. These services, housing on top of the land, buildings, office buildings on top of the land, stores, supermarkets, malls, the whole thing. These things are coming to Bitcoin. Bitcoin is Manhattan, like Manhattan land. All the buildings, all the homes, all the services, all the things are yet to be built out. That's how early we are. So if you had prime Manhattan land, you can walk, trust me, I'm a New Yorker. You can walk into any financial organization in the entire world and basically get a blank check Do you understand? You have an asset that is so rare and so valuable that banks in any financial institution, Goldman Sachs, JP Morgan, they will be tripping over themselves to give you the open checkbook faster than the other one can give it to you and give you a number bigger than everybody. You will have to choose between who you want to receive the services, the money, or the thing from. They will be competing for you. Do you understand? Guys, you have to understand this. I'll say it again. This is becoming, in April, it's the rarest asset on the planet. In 2025, I believe it's the most valuable asset on the planet. You don't think banks right now are lining up to beg you to give you services? You don't think that's why BlackRock is getting into this? The Fidelities are getting into are into this. The Invescos are getting into this. You don't think that's why there's a mad rush to get in? There's freaking musical chairs going on right now, and they get it now. They understand it, and they want to give you services. They want to build out services on top of this Bitcoin. They want to give you the ability to get any house you want on the planet. You want a house that floats on the ocean, a yacht, you can get a yacht. You can do anything you want to with this asset in the future. Think of how the real estate moguls live. They almost never sell. And their generation after generation do not sell. And they're all wealthier and wealthier every generation, not less, more. And that's what you have to keep in your mind, that this is the ultimate real estate now. And that all those services, you've got everybody rushing to provide them for you. So I say we're one cycle away from you being able to do anything this green earth has to offer without ever giving up ownership of your Bitcoin. That is coming, ladies and gentlemen. And it's coming in short order. All right, guys, I think that's it. Like I said, you guys don't wait. I see all these numbers here. Amazing space. Thank you very much, Jason Street. I appreciate that. Lazy says, "Hey, Oliver, I think that's the one I just took there." There's new replies here. Show more. Hey, Oliver, Jay Can says, "Hey, Oliver, I'm late, but what happens once the mining stops in 2140? Planning on living forever, are you, Jay Can?" Yeah, Oliver, I'm concerned about when my 147th birthday comes up. What am I going to be doing? No, I'm teasing you. 2140. All right, that is what, 116, 117 years from now. All right, the Bitcoin network will have no more Bitcoin to mine. In fact, the last epoch, there are 33 epochs in Bitcoin's life. Its first phase of its life, actually. And that 33rd halving, it literally releases one Satoshi every 10 minutes. One Satoshi every 10 minutes. One! You guys can buy 1 million for 250. Do you understand how valuable one Satoshi is going to be in 2140? You're going to have billions upon billions upon billions of dollars in mining equipment spread all over the world, every country in the world competing, every major oil company, every country, maybe even every human being at that point, competing for one Satoshi every 10 minutes. Wow. Okay, I digress. So the question is, what's going to happen? What other security measures are there aside from the hash rate? Well, you are the security measure. I am the security measure. And energy, yes, hash rate. You can't just say besides hash rate. I believe that's everything. But also, it's a collection. It's a stew of different things. So Bitcoin sort of miraculously combines energy, hardware, technology, human nature. All right. And so on the human nature front, Bitcoin relies on you and I not wanting to mess up what we have. Who amongst us will vote to debase our wealth? You? Me? Never. Your family's worth in US dollar terms equivalent 40 million right now, let's say 40 million from a US dollar perspective. It's worth 40 million. And would you vote to lower your wealth to 20 million? Will you vote for anything that will damage that, debase that? Will you vote for someone to say, yeah, I think we should have 25 million instead of 21, knowing that that's going to drop your percentage ownership in the network, lower your wealth? You will never do that. Your and my vote with a node is required to make any other change like that. It's never going to happen. Not going to happen. If someone wants to fork Bitcoin, let them fork it. Who's going to go to that coin? Who's going to dump the wealth that they have now for some unproven fork over here? Nobody's going to do it. They're not going to do it. It's too far gone at this particular point. And so remember when I told you that I believe that the base layer will not be used very frequently, and all the layers on top are where the activity will be. But the movement on the base layer will be for big amounts, and the fees are going to be hefty. I believe that the fees on this enormous value will support the miners. And we've already seen glimpses of that, right? Where the fees, see, miners are rewarded Bitcoin and fees. And so as the Bitcoin gets less, the fees should mathematically get more. So remember, the fees at 100,000 is going to be higher than the fees at 1,000. And the fees when Bitcoin is valued in US dollar terms at 1 million are much higher than the fees at 100,000. All right. So the fees will, in my opinion, stay on par with the declining reward of value of mined satoshis, mined Bitcoin. So as the halvening cuts Bitcoin in half every 4 years, the fees must compensate at some point, but not just the fees, the price. So price and fees compensate together. So for instance, if the halving takes place, and let's say in April, the halving occurs, to make a round number, make it a real easy round number. Let's say the halving occurs and Bitcoin is 50,000, which I think is very possible. So Bitcoin's 50,000 by April. All right, the halving takes place. And so instead of 6.25 Bitcoin coming out every 10 minutes, being born every 10 minutes, now it's 3.125 Bitcoin every 10 minutes. All right. But remember that the half of that Bitcoin now coming out, we're 100% higher than the 6.25% that's coming out now. Do you understand? So there's 6.25% coming out now. Let's say by the halving, we're 50,000. Now 3.225. There's no loss in value there. And the fees are the extra cherry on top. I believe that mathematically, Bitcoin will for a very long time maintain this profitability level that the miners need to continue to secure the network. Meaning that if the break-even point for the majority of miners in the world becomes 70,000, Bitcoin's going to spend the majority of its life above 70,000. If the cost to break even as a miner moves to 120,000, Bitcoin will spend the majority of its life above 120,000. That break even cost will go up, and also Bitcoin's value will go up, but it will go up and have to go up much faster than that number to account for the halvings that happen every 4 years. And this is one of the things I incorporate into a private price model for myself. Like, what's the potential of Bitcoin? One of the components is the future break-even price of Bitcoin mining. And I know that that Bitcoin does what it needs to do to take care of the miners that defend and protect it. And so if the future break-even price is 70, and I'm telling you what it is, after the halving, right? After the halving, the overall break-even price is around high 60s, low 70s. That means that Bitcoin has to spend the majority of its life above that. It can dip below it, but it's got to spend the majority of its life above that. And that's one of the ways I come up with my own personal price model based on that break-even price. But I wouldn't worry too much about that. All right. I wouldn't worry too much about that right now. All right. All right, guys. I love it. You guys are awesome. DA is asking a good question here. What about people that have multiple revenue streams and sell a product or service that accepts Bitcoin? Doesn't that add to the demand? Yeah. So here is, I think what you're getting at, DA sales, is this. First, Bitcoin is going to be hoarded. That is its use case. That's what it really needs. We need people hoarding it, not letting it go. We need enough people that have it, right? That a very well-developed market can occur from that. And what will start to happen as more and more people understand Bitcoin, guess what they start doing? They start demanding things in Bitcoin. As the understanding grows more and more, you're going to start doing it. Someone's going to say, can you take me to the airport? I'll throw you a few dollars. All right, I'll take you to the airport, but you got to give it to me in satoshis. Don't give it to me in dollars. Some of you will do that right now. Some of you will do what I encourage people to do. Pay for your friend's dinner and make them give it back. Make them give their share to you in Bitcoin. That's non-KYC Bitcoin. Even if it's KYC for them, it's non-KYC for you. They don't have you on their tax returns. All right. So you're going to start demanding things in Bitcoin. I'm going to start demanding things in Bitcoin. I'm going to say, listen, I'll do it for you, but I'm not doing it for dollars. You got to find a way to get me Bitcoin, and then I'll do it. And this is going to grow and grow until the majority of people don't want what's being devalued. They want Bitcoin. And as increasing numbers of people demand in Bitcoin, the entire world is going to have to adopt to it. Everybody is going to have to. There is not a single person that will not adopt Bitcoin. It's impossible because the world is going to increasingly say, I want this versus that. If you were to ask anybody on planet Earth, no matter where they are in the world today, if you were to ask them, you say, listen, they may have never even heard of Bitcoin, which is doubtful. But anyway, let's assume they've never heard of Bitcoin. And you say, listen, you have a choice. If you had a choice to receive a money that got scarce, and more scarce almost every day, that the supply got cut in half every 4 years, that no one can ever steal, that is always yours, that you don't need permission for, that no one can take from you, no one can make it less, and that is programmed to go up in value every 4 years of your life forever. And if you were to pass it to your kids, it would go up every 4 years for their life forever. Now, and it's global. It's open for business 24 hours a day, and you can send it to anyone instantly all over the world. Now, if you had a choice of receiving that as your money or the money that your government says you should choose, which one? There's not a single human being today that would say, I want the one that my government forces me to deal in. I want the one that can be confiscated. I want the one that is debased every single second I hold it. I want the one that they tax. I want the one, I want the one that I don't even know what the supply is. I want the one that I don't know how many they printed new of yesterday, even last hour. I don't know what they do with it. I don't know what they're going to do with it next year. I don't know how much of it's going to be out there the next day, the next month, but that's the one I want. No one in their right mind, I should say, is going to say that. And so if that's the case now, imagine when people really understand that is possible. Imagine when people grow to understand, oh my God, this does exist. This can't be taken from me. This can't be debased. This isn't in the control of a single human being. This doesn't need someone to approve me. I can transact with Oliver Velez even though I'm in Zimbabwe today. I'm building a website for him. He can now send me money. Like, wow, when the world begins to understand this, sorry guys, I got a little cold. More and more people are going to say, you know what? I don't even want this on my record. Don't give me dollars. Here's my wallet. Send me satoshis. I don't even want it on my record. Just don't pay me tomorrow, but don't pay me in dollars. Pay me in Bitcoin. You don't think that's happening now? You don't think that's going to happen more and more and more and more all over the world? And dude, I don't know what to tell you, because that is a given right there. That's a given. And some of you are doing that right now. Absolutely. Some of you are doing that right now. It's crazy. My name is Oliver Velez, and I am your 13%er Bitcoiner. Be safe out there, and until next time. Boom!